Bonjour. Welcome to an all new What Are Your Thoughts? I'm Josh Brown here with Michael Batnick as usual, and we're going to talk about the biggest things happening on Wall Street and in the financial industry today or this week. Stick around. Let's play some games and let's have some fun. Mike, I want to ask you about the December IPO slate because it's big. There's like 5 very well-known, very popular companies coming out. And I wanted to see which of these, gun to your head, you have to buy one of them on the IPO, which of these you would buy. It's Airbnb, it's Affirm, which I think you've written about, Roblox, Wish, or DoorDash. Got to pick one.
Not only do I pick Airbnb, I'm actually probably going to buy it at the IPO.
No!
Yeah.
That's the one?
Yeah, that's the one. So Bern Hobart at the Diff, he has a Substack called the Diff, did a great write-up on Airbnb. If you're, he synthesized the S1, so that was awesome. Airbnb, maybe that's a Freudian slip. Airbnb is in more than 220 countries. Their hosts have welcomed over 825 million guests arrivals and have cumulatively earned over $110 billion. That is so much money that was not going to people's pockets. There's 4 million hosts now. I think that this is going to be one of the biggest companies in the world.
You really do. All right. The near term, it's a wild ride. By the way, I have so much respect for Brian Chesky. I saw him speak at Andrew Ross Sorkin's thing last year. He's like the real thing. So I think they'll be successful, but they're getting, I think, a $35 billion valuation out of the gates. Revenue is down 32% this year, and that's encompassing the rebound in Q3. Like they are way off still.
The Q3 was 28% decline. That's not that bad considering what just happened.
Well, no, I'm saying they started to see a bounce.
Q2 was a disaster, 67% below.
Yeah, this is a company that was worth $36 billion pre-pandemic, and then they had to do a down round at $18 billion.
Yep.
And then they did an emergency debt offering. The debt will still be with them. And now they're going to go public again at $35 billion. It's a really wild ride. I have a prop.
But wait a minute. Okay, let's see the prop.
I got to get the prop first.
So let's be.
That's Brian Chesky. And this is an actual box of cereal.
Who sent that to you?
Do you know why I have this?
No.
Okay. I wouldn't have known the reference either. You know the guys at Public? They're like Robin Hood, but like nice.
Yes.
Okay. So Public made this box to commemorate the Airbnb IPO because the legend has it, Brian Chesky in 2008 was running out of money to keep Airbnb in business. So he ran up 30 grand on his own credit card, having cereal made for Barack Obama and John McCain's campaigns, and sold it online as collector's editions for $40 each. So he raised like 30 grand to keep the company running in the early days. So I don't know how the guys at Public knew that story, but they went all out. They even did like a maze on the back to go how to go from idea to IPO. So very cool.
To be clear, I think that Airbnb could be one of the biggest companies, obviously in hospitality. When I say it in the world, I don't know, top 20. And I'm saying not tomorrow, not a month from now, 5-10 years from now. So I might buy it. I might actually buy it at the IPO, and I have no intention. It could get cut in half in 2 weeks. Who knows?
The 2 negatives are the ones that you always hear. The first is valuation, blah, blah, blah. Hasn't mattered yet. The second is they're going to start getting taxed in all these jurisdictions where they're basically letting people earn revenue, and these people are not real hoteliers. They don't have licenses.
Wasn't that the same thing that was going to take down Amazon?
And Uber. So yes. Okay. I don't hate it. Mine is DoorDash. And I do hate the other ones, which I don't know if we're going to have time to get into, but 50% market share of food delivery. So it's a bad business, but they have half of it.
Right.
They have 390,000 merchants, 18 million consumers, and 1 million people running these orders back and forth. So it's a very big business. The story they're telling the street is that they're like the savior of brick and mortar businesses. Like their delivery service is what's enabling all these restaurants and stores to survive. And
they're gonna have to do more than just delivering food, though.
Fine, but that's the same story that Shopify had been telling. and it worked for shareholders of Shopify. So not that this is as profitable as e-commerce. Delivery is grimy. But in the first 9 months of this year, $149 million loss on $2 billion in revenue, compared with a $660 million loss on only $587 million in revenue the year before. So revenue is exploding and losses are shrinking, which is what you want to see. They actually posted a surprise profit in Q2.
You could argue that Q2 is as good as it's going to get for them.
Maybe. So throw that out. Just look at the first 9 months of the year in their totality. The company's like inching toward profitability. Roblox, I think, looks like Candy Crush. 31 million daily active users. My kid tells me it's like the people that are into it never stop playing it. It's like Minecraft, which was bought for big bucks by, I think, Microsoft. But here's what I don't understand. Andreessen Horowitz is a backer. This company's been around since 2004. Why are they still losing money? They lost $589 million in the first 3 quarters of this year, compared to losing $46 million in 2019. What is the deal?
I don't know anything about this company or this business, so I can't even.
It's like
speculate.
Legos on an iPad. It's super nerdy.
All right, I want anything else.
Wish is garbage too. I looked into this one. They're selling like cheap Chinese garbage on the internet. If you want to talk about Q2 being the pinnacle, I can't imagine it ever getting better for Wish than this year. And they're gonna get $30 billion on $1 billion in revenue. Get out of here. I'm a short. All right, that's all I got.
All right. I want to ask you about round numbers. Last week, the Dow hit 30,000. Newspapers going nuts, investors going nuts. Other people saying, "Oh, round numbers don't mean anything." What's your take on this?
I was looking back at the history of round numbers the other day, and I got my Series 7 in the summer of '97. I was like right after my freshman year.
Was it Dow? The Dow was
college.
at like 6,000,
7,800. And it broke 2 years later in '99. It broke 10,000, went right to 11,000 and crashed. Then it took a few years, got back to 10,000. But like even in the last few years, do you realize what went on in 2014?
By the way, I remember breaking 20,000. I mean, that wasn't that long ago. And
recent. It was 2017.
That's it.
That's it, dude. The Dow. All right. So just really quickly. The Dow was at 15,000 and change to start off 2014, had 39 closing records, got up to, broke 16,000, 17,000 that summer, 18,000 that Christmas. The next year, in 15, it really did nothing. We had like a correction, but then from 16 on, it's been milestone after milestone after milestone. Like 2017 started under 20,000 and I think ended over 24,000. It's like a crazy year.
This is a bit of a tangent, but Miles Udland wrote, since 2013, the S&P 500 has more than doubled, and hardly anything has changed in how most pundits see the stock market. It's such a good point.
Oh, if you were bearish then, the same reasons that you were bearish then are probably prevalent.
And it's the same people, same reasons. But let me hear your thoughts on round numbers and why they do or don't matter.
They absolutely matter because they catch people's attention and remind them that there's something that they should be doing, which is invest. And I'm not saying every time we break a milestone like 10 or 15 or 20, that's a reason to put money in. But I'm saying if you've not been putting money in, or worse, if you're like betting against the market, like there's something wrong. Like this, at a certain point, there's something wrong with you, with your personality, that you think you know better than everyone else that's investing for their future all the time. So I don't think you should say, "Oh wow, Dow 30, let me get in." It's the opposite of what I'm saying. But what are you going to be doing with Dow 40? Like, are you going to be subscribing to people who are talking you out of investing for $6 a month? Like, is that what you're going to be up to?
Right. So do round numbers actually matter to earnings or anything like that?
No.
Of course not. But they matter bigly to investor psychology because USA Today, the Wall Street Journal, every big media outlet is talking about it. CNN, Good Morning America, and that that stokes the fear of missing out and all that sort of stuff. So I absolutely think it matters. All right, what else do you got?
I think you can't afford to not invest, and it's a reminder every time that happens. All right, I want to get into this massive merger that happened this week in financial information. Did you realize that IHS Markit was this big of a company?
Nope. Not only did I not know, I had to like Google like
Holy shit.
what properties do they own, and no, I didn't realize how big they were.
I think this is going to be one of the biggest mergers of 2020 in dollar terms. $44 billion.
It's the biggest. It's the biggest.
The biggest. It's going to be bigger than what Salesforce pays for Slack. And everybody knows Slack. Nobody knows what this company is. So IHS Markit, we see their data a lot, I guess.
They own
'cause we're like-
Carfax.
yeah, they own like all these data things, but they own like investment market data. They're going to sell themselves to S&P Global for $44 billion.
And not just investment market data, like all data, and they're global, obviously.
Yeah. I mean, this is a massive deal. I guess like the only big information company out there that most people think about is like Bloomberg, let's say. But like some of these companies are just absolutely enormous. I was blown away by the numbers here. All right, what do you got?
Tesla is being added to the S&P 500 on December 21st. It is by far the biggest addition to the index. They're going to do it in one fell swoop. So I want to ask you this. Should investors care? And here's where I'm going with this. So like they say let's say that this is the top. Yahoo was added at the top. What another company was? WorldCom.
Happens all the time.
I can't remember, but yeah, it happens all the time. But now, let's say that Tesla goes from $550 billion when it added its inclusion to $200 billion. Like if you're an S&P 500 index owner, which many people are, should you be annoyed at that? But what if an easy solution to this is instead of like, if this really, sits poorly with you, what if you just own the Russell 1000 or the Vanguard Total Stock Market Index? And this is kind of interesting. So year to date, the Russell 1000 is outperforming the S&P 500 by a decent amount, 16.5 to 14.7. That's
Say
pretty.
that, wait, so who's outperforming who?
The Russell 1000 is outperforming the S&P 16.5 to 14.7. And what's even more remarkable about that is think about the Russell 1000 has more mid-cap companies, mid and smaller. Those are trailing. So the only reason why that difference exists is because of Tesla. Because Tesla is in the total stock market index. It's already in the Russell 1000. Zoom as well. So
There's probably 10 of there's probably 10 of those that are big enough stocks.
So maybe
that aren't in the S&P that
So
matter.
maybe that's a solution if you're really pissed off about this. But I think Tesla is adding like 160 basis points in performance to the Russell 1000 year to date, something like that.
What would make you pissed off about it? You own the SPY, and they're
now-
like in 2 weeks you're gonna have Tesla.
Hold
what's
on.
the problem?
It's the fifth biggest company or sixth biggest company in the index, and you're buying it at an enormous valuation.
I see. So the problem is that they're adding it to the index after it's already become the fifth largest company.
It's up 600% this year.
I mean, they added Berkshire when it was one of the top 10 companies. It was 180 something billion when they added it, and it obviously wasn't as egregiously valued as Tesla. So I understand it's different, but they add big stocks like it does. This is maybe the most extreme example of all time.
It is.
Maybe they should have dipped a toe in the water and added a little bit of Tesla like 3 years ago. So then adding the whole thing now doesn't seem as ridiculous. I don't know. The other option is to direct index. Like if you want to own the index, but you want to pick and choose the stuff that you really don't feel comfortable owning, or you've got a personal grudge because you don't like the tweets a CEO sends or whatever, direct indexing might be for you.
Well, yeah, it's not really available to everyone yet.
I gotta be honest with you. I talk to like real folks. Like I walk up and down Merrick Road in Belmore, and I get a cup of coffee, and I go to the hardware store and shit. Nobody gives a shit. Adding Tesla. All these people own 401ks with the S&P 500 index. It's not keeping them up at night.
Well, they're
It's
not.
like-
They're not watching this video. I'm talking about people that
No.
are interested in the market.
Yeah, I just feel like it's not that big a deal. And by the way, if it is the top for Tesla, and Tesla has a really shitty 5-year run, with every passing quarter or year, it will shrink in importance to the index. And so what? Life goes on. I don't know. That's how I feel. I want to ask you about the NFL. Are you still watching, or
Of course.
did you like give up? You are? Like, are you watching a lot of games, or are you just watching the Giants?
Both.
Red Zone.
I have Giants and Red Zone on.
All right. Is there any player left that doesn't have coronavirus or that isn't injured? Is this the worst thing you've ever seen?
In 3 weeks, we're going to see so the Broncos didn't have any quarterbacks on the roster. We're going to see a team with no offensive linemen.
Yeah.
The kicker and the punter are going to be playing left tackles.
Dude, and now like my best player, I have this guy whose doctor gave him illegal drugs. What's his name? Will Fuller.
So
what's going on?
The NFL will not cancel a game ever. They're pushing. So the Ravens were supposed to play on Thanksgiving. Everyone on the team has COVID. Then they were going to play on Monday night. Now it's Tuesday night. Now it might be Wednesday night.
They should just let the fans play. Like I almost feel like they should draft from the city, like really promising.
I was thinking about
college players.
Vince Papale and Mark Wahlberg played that character in Invincible.
And that was a true story, right?
Yeah.
I don't know. I stopped watching when Saquon got hurt. Like I stopped watching Giant games, and now I think they're in first place. I think they're in first place in the division.
We had a 3-game winning streak for the first time since 2016.
No, I know. It's been out. The only way that's possible is because of how shitty Dallas is.
Anyway, nobody cares about this.
I'm barely watching.
4-7. All right.
All right, go ahead.
So, Euphoria. The show is coming back. I'm excited about that. But Euphoria inside the stock market.
Euphoria on HBO is coming back?
Yeah.
That show is crazy.
Dark.
I don't even think I'm supposed to be watching it. But
super dark. It's not. Yeah, it's a hard watch, but it's a good watch. All right. Okay. So remember, like 30 days ago, when a lot of people were worried about the election and whatever, and understandably so. And there was fear. So if you look at like the CNN Fear and Greed Index, for example, 1 month ago there was fear. This is a composite of a bunch of different market data. Last month it was at 30. Now it's at 86, which is extreme greed. You look at the AAII survey, you've got bulls up, bears down, nuts. I mean, this is what happens after a record run in the stock market. But rewind to 30 days ago, seriously, where investors were at 30 days ago. It's unbelievable how quickly this thing's changed.
Yeah, but it can go back too.
Yeah, dude, if the market falls 5% in 3 days, it's back to extreme fear.
Dude,
I feel like this needle swings so fast.
It's almost as though it's not worth worrying about at all. I think sentiment data is interesting and really important, like for context, because it gives you a sense of like what people's expectations are at any given moment. But I'm not sure there's a way to like regularly capitalize on it. It's probably like fund flows for me, where it's like, all right, that's interesting. I'll be sure to remember that the next time I'm in Jeopardy.
Pull up a stock chart. Like, seriously, look back at the end of October.
Yeah.
NASDAQ was rolling. S&P was rolling. Like, this, no joke. Like, this could have been, people were like, this is it.
What was that about? Was that about the election or the I think the coronavirus? I think the coronavirus resurgence.
It was
which
all
I
the
guess
above.
we're all cool with now.
It was all the above. We had that down 6% week. I think it was the worst week since March. Like, people were scared.
Yeah, I'm super bullish right now. I've been all year. I said the election basically.
Hold on, you were not super bullish in March. Neither was I, but you were not super bullish.
Yeah, since then. So I still bought stuff. No, but I've been super bullish for a while. I'm going to tell you something.
Just between you and me?
Yeah, keep this to yourself. They're going to give the first vaccines out in London on Monday. Do you understand that? It's going to be every reason to not be invested is going to start falling like dominoes, and then earnings are going to grow like crazy next year. And all these industries that pretty much should be bankrupt right now, but were supported, they're going to start coming back. And
then that's when you sell. By the way, let me ask you this.
You could be out if you want.
Let me ask you this.
It's not going to be fun.
Ben made a good point on the podcast on Monday. You could easily make the argument that the stock market had a better year than it would have otherwise had COVID
100%.
not
100%.
transpired. The market is up 16% this year.
Dude, we were going into recession. The yield curve inverted last year, and the trade war was literally pushing us into recession. We had this massive resurgence in durable goods demand.
So the coronavirus the coronavirus saved the stock market. It's so mental.
It's horrible, but what pulled us out of the Great Depression? World War II. Like it's you don't want to cheer about this stuff. It's just a reality of capitalism.
Yay, capitalism.
So 100% coronavirus is the reason why we are where we are. I don't even think it's controversial. All right, we have some viewer questions. They're not even questions, they're like topics. What do we got first, Duncan?
Okay, guys, we got a lot of great questions this week. First up, Ben writes, what advice do you have for someone who just passed the Series 7 and is in the process of studying for the Series 66. Any advice in particular about building a book?
That sounds like it's one for me. I'm not sure building a book like a retail brokerage book. I don't know. Can you really do that still in 2020? That seems like it'd be really tough. I would focus on becoming CFP track and learn financial planning and not worry so much about building a retail brokerage book. I think commissions are zero now. So I'm not even sure really how you would get paid for that kind of work.
Also, a young person, my advice would be to latch on to a team and learn as much as you can.
Yeah, I mean, you're definitely not going to build a book by yourself in your early 20s. No, why would anybody want you giving them advice on anything before you've done anything for yourself? So yeah, I agree with Mike. Find successful people to work with. That would be my best advice.
Hey, Michael. Jake is 29 and a huge fan. He's been buying into the market for the last 3 years and writes, "My toughest challenge is averaging up. I find it remarkably difficult to add to positions when I'm averaged in at a much lower price. Any suggestions on strategy or books that would make me feel better about this?"
Yeah, when you say averaging into positions, it sounds like you're talking about single stock securities, and I get it. That's really hard. I would say automate it if you can. Just that's the only answer because yeah, you're right.
Automate single stock purchases or automate
you can.
I don't know about that. How would that work? So you say every month I buy $500 worth of Disney?
Yep.
No matter what price it's at?
Yep.
So I like that for ETFs.
I like that much more for indexes, obviously.
Yeah.
But how else do you do it? If the market's going up, you're trying to build positions. How else do you do it? You automate.
Here's how you do it. Let's say you buy a stock, right? And it's at $50 and then it goes to 60. You have to remind yourself that you weren't that smart. Just because you bought it 10 points lower doesn't mean that you pinpointed the perfect time to buy. 60 may be just as good a time to buy as 50 and you got lucky on the first purchase. So remind yourself that you're not that smart and that just because you bought lower doesn't mean it's still not a good time to buy if you're trying to get enough of a position in a stock that it actually matters. I've been averaging up and stuff all year. It doesn't mean it's the best strategy, but what's the alternative? Nailing it on your first purchase every time? That's obviously not going to happen. And if you don't own enough of something that you're very right about, it's worse.
So but you didn't give a solution. Automate.
No, remind yourself that it's okay to pay up. He's looking for psychological help. He's not looking for mechanical help.
He wants
you to make him feel better about paying up for stocks.
Congratulations, you're picking winning stocks. Buy more.
Yeah, all right. That'd be good enough for me too. All right, but we want to hear what your thoughts are on all of these topics. We love your feedback. Go in the comment section. Go crazy. Say whatever you want, and we love it. We respond. We laugh. Sometimes we cry, but do it anyway. Make sure you subscribe to the channel. Hit that bell. You're going to get the alerts every time we put out new stuff. Every Tuesday night, we're on here. We love that you guys are joining us for the premieres as well, and we will be back next Tuesday with another edition.